Well, we had an opportunity to get back in around the 75s area, 75 area, right where we got out, but we missed the trade just doing some stuff around here. So that's okay. We'll just take a break. We're not going to be hasty or anything. That first trade was a nice trade, and we'll have lots of opportunities the rest of the day. But that was an opportunity back in the 1039 column. Everything lined up, the NYSE tick, the 5-tick reversal chart, and it looks like we're going to make a new high in the C period, which should propel us to new highs. So we missed that re-entry. So we have a new high at 83.5. It's nice to see the entries though, and even though you miss them because you're doing something, at least you recognize the opportunity. So now we have another volume cluster that was built in the B period that the C period couldn't penetrate, and that's between the 70, I would say about the 72, 75 area to about the 75 area. We couldn't break that volume cluster, so that's the second volume cluster. So if you were still long, that would, underneath that volume cluster around 73 would be your stop. If you got in 75, there wouldn't be any reason to risk anything more than 73. So if I would have got back in, that would have been my stop. Which is quite different than the stop I used this morning at the open because there was a lot more uncertainty. Now there's more certainty. You have an identification of the areas where volume has been accrued. You have a test. You had a test in the B period of the A period cluster. You had a test in the C period of the B period volume cluster. So those factors give you parameters of which you can limit losses based on potential reward. So that's sort of an interesting observation. Well, it's off the screen now, but we hit the closing range low of the end period on Friday at 85.75. So if we would have stayed with the trade and not got out of 75.5 on that little retracement, we would have hit our initial target. That is what it is. We made money. We didn't maximize the trade completely. That's certainly a goal that we can work on. I still need to implement some strategies in the journal that Dr. Stenberger made available. I was going to do that this weekend, but got sidetracked with a party and a batch of kittens and so on and so forth. But look at the market; it's going back up. So we're having a strong day in the financials. Financials are making new highs. The E-mini is making new highs. So is the XLB and the XLE. So we have a strong market today. We have a positive bias across the entire board. Not unusual, really. At least it's not the first time I've seen this. Market's down a lot over Globex. Inventory is way too short, and they take all the short inventory out. Well, we've had a retracement down to 71. We're not in the market yet. We're just sort of taking a break. We'll let the market consolidate over the lunch hour, see what the afternoon session does. Well, it doesn't seem like the support is holding at the 12, I have it marked on the chart, 1265 to 1269 area. We were anticipating a consolidation in this area, which we might still have over the lunch hour. This is where the big block of trade in the A period propelled us up to the C period high in the 87, 88 area. So, what you have to do is keep an eye on the volume, keep an eye on the tick chart distribution, and I think be a little patient here. The thing that I should have worked on, and it's been on my mind, is when we get out of a winning trade, it's an enjoyable feeling. So we usually take a break. I'm not sure that's the right thing to do because we miss a lot of obvious opportunities. Not necessarily an impulsive reversal at the exit of a particular trade, but within a span of minutes, the opportunity becomes apparent that there is an asymmetrical opportunity, just like the one you just achieved, just had. And today, of course, it would be the reversal in the 85, 86, 87 area. I think we could have, with a good enough risk, a 10-point risk on a day like today, I think easily we could have got short from the 83s to the 84s. I don't think we would have got filled any lower than 83. And you can see from the hour of 11 o'clock 12 o'clock was quite a move to the downside. 20 points, or pretty close to it per contract. That would have been a 60-point trade, which would have propelled us really close to 100 points today. That's an awful lot of points for me in this early stage of my career utilizing auction market theory. So that's really interesting. That's really really exciting. So we look forward to the continued work in progress and see if we can't get along here if an opportunity arises. See if this area consolidates here between the 65s and the 69s, and if it does, it might give us an opportunity to get aboard on the long side, or if something else happens, look for a retracement back to previous resistance, which would probably end up being this area. If this area consolidates and fails, and we have a retracement back up to that area, then I think that's a good short, looking for lower prices towards the close. So either scenario is plausible. The key is the execution of either one of those. Well, we have the F period about halfway through, and it looks like in this consolidation area between 65 and 69, they're buying. There's some, this is the area that needed to hold if this market's going to rotate back toward the highs. And so far we have 90,000 in the F period with about half the time to go, and we have a 3,000 positive bias. New York tick chart is building higher lows, and it looks like there might be an entry here. Although I don't particularly like to get in during the lunchtime, I think the market's going to be active through lunch, and so I think the risk is pretty good to the potential reward of getting back to the point of control in the mid-70s, or the other end of value up in the 80s. So we'll look for an opportunity for an entry here. We're getting close. Another couple minutes maybe. You got to take the 67s. We missed a better opportunity. We're going to take 367s long. Our stop is 63. We see a divergence in the XLF compared to the E-mini S&P, and the New York tick chart, was trading below the second standard deviation during this consolidation time. We've had an oscillating day, started low, up, went up, and then hit the second down, and hit the second up, and hit the second down, and now we're working toward hitting the second up. So we're looking for a continued positive bias. If we see something change in this F period before we get stopped out, even though our stop's relatively close, it's only 4 points away, then we'll get out of the position if what we believe has a good probability of happening doesn't happen. And one of those factors would, of course, to see a decrease in our delta, and we are seeing that. Now we have 105,000 traded with a 1,500 positive delta. 2 minutes ago it was a positive 3,000 delta. So we're going to keep our eye on this close. We had some cross trade, but it's really nothing. One contract traded here. We're back just a few columns ago, 1,211, 1,100 traded passively. So, that's a good sign that there's not much volume down there retesting that area. We'll see if that remains true. We're getting out of this trade at 65.5. We don't like the action here. Out 65.5. We saw some action. Delta turned negative. Now we're negative 1,700 on 115,000 in the set period. So the last seller is sold. So why wait till our stop would have got hit at 63 to get out? 65.50 is a better exit than 63, even though 63 was a protective stop in case the market moves quick. So that was a real good trading decision there, I think. We minimized the loss. We took the opportunity, seeing the asymmetricalness of the trade, and we got out when what didn't happen, what should have happened didn't happen. So we're going to stand by here and see where we go in this F period, see if we can break below the 8 period low. Well, we're late on this trade, and I hate to buy these kind of breakout rallies. We had the 65s, we got out, that was the right thing to do, and we had an opportunity to get in, but we didn't at 61. Why I didn't get in, ask me. We were anticipating a break below the 8 period low, and we just didn't get it. The G period opened up, traded 36 at 60.50, We watched some increasing volume at 61 and a quarter, 61.50, 61.25 coming in, but that was passive buying and wasn't actually selling. And I just didn't get aboard that opportunity. So we're going to see if we can get in here at the first opportunity. We're going to take the 6650s long, 6650. We'll produce this video and follow this trade in the next one.